What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol BYND for Beyond Meat. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know they gave us an earnings announcement after the bell today, so let's flip on the extended hour session and see what's going on with that number. So my goodness, quite a bit of destruction in this chart here. Big gap down as of right now. What's the percentage move on this? Let's just measure here. We'll take out our measuring stick, if you will. Come from the high and hover the cursor at the low. So a move of about, that's going to be, almost down about 20% here, about $18 or $19. We'll just round it off for round number's sake. So pretty aggressive move lower on the earnings report. So pretty fair to say we will be opening on a gap down for tomorrow's session. Let's mark off the overnight low and the anticipated open. And what we're about to do is talk about a framework. So these numbers are subject to change by the time 9:30 rolls around. However, the framework and the psychology behind it remains the same. So adjust accordingly if we're opening at a different spot come 9:30 tomorrow morning. Let's scrunch up the daily chart and talk about how this might actually unfold tomorrow. So whenever we're dealing with gaps, could be up or down, the first thing we always need to consider is the gap and trap. And what that looks like would be opening here, failing to take out the overnight low, trading back higher through the open, basically looking for the gap to fill up to today's low of day. Now, given the severity of this gap here, we're not looking for that to happen all in one day. Now, could it happen? Certainly could happen. Anything can always happen in the marketplace, but it just wouldn't strike me as reasonable for the stock to really put in a daily candle that would look something like this to fill the gap. Also note, right, if I scrunch up this chart one more time and sort of do something like this, we were in a pretty firm downtrend to begin with, so I don't really think that there's going to be an aggressive counter trend move to, again, put in a daily bar that would look like that. If we look at prior earnings cycles, so in here, the ranges are nowhere close to what we see if the gap were to fill. So again, just more reasoning as to why I really don't think it's a likely scenario, but we should at least think about, again, a half gap, right? So that's always what you, contend with whenever you're dealing with really large ranges. So if we take out the fibs, come in from the anticipated open to the close of the gap, the halfway mark is about $85. So that's what I would watch out for if the move is going to be long in the first place and we see a really strong opening drive higher, some sort of bullish pattern be put in. 85 is sort of that number to watch out for. Then maybe the gap fill, but probabilities would say not really likely. Let's talk about the downside case now, because of course we can't ignore that, right? Again, we were in a pretty firm downtrend. We don't have anything from this year's perspective as to lower levels. So we're going to go ahead and pop some more time on the chart here. So 5 years ago, let's see what we have underneath us for support. I'm certainly noticing this as a solid area, and then underneath, let's zoom in on that a little bit more. Let's split the difference. Let's call it here at 57.42, noting that we had a prior area of resistance on a couple candles in there. And then again, splitting the difference between this, and this here kind of, gives you a rough ballpark estimate of where we might go if the move is aggressive to the downside on top of the pretty severe gap that we're already contending with. So let's come on back over to what's going on currently. Let's clean up the chart so we can actually see those numbers. Again, very realistic for a gap down and a gap and go, like continuation play, to take us into that 72.22. But again, do you really think that we're going to put in a daily candle that looks like this all the way down towards 57? Not really likely in my estimation. Again, the market can always do whatever it wants, but probabilities would say it's not really likely. So I would just be cautious. If we come into the first target here, start to take off a majority of the short position if that's how it pans out, and then just, trail stop lower if it moves into here. Be on the lookout for any patterns that form that could signal, hey, this is it to the downside. This could potentially be turning around here. That's where you would kind of bail on the short-sided trade. And just to sort of follow up on how this might actually unfold, right? The gap and go technically looks like opening here, consolidation in that overnight range between the overnight low and the open, then a breakdown takes us into that obvious area of daily support from in the past. That's really going to wrap up the video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.